Listen, usually I don't curse, but this TikTok video that I'm going to share with you was someone saying it's a genius idea to get a 50-year mortgage. You heard me right, a 50-year mortgage. And I really shouldn't be surprised. People on TikTok, they say the most craziest things. You really need to check this out. You need to let me know how you feel about it, because this is right here insane.
Everyone's freaking out about the 50-year mortgage that just dropped, but I think it's pretty genius. And if you're new here, I'm Theoni, the lender. I've been a lender for 10 years. I help people every single day from this app buy, sell, and refinance. Let's get into this because I have such an interesting take on this that most loan officers do not share. And I'll start by saying that they don't share the same idea because they're loan officers, not loan advisors like I am.
Yeah, they're loan officers and they're smarter than you. You're a loan advisor that's just trying to make some money from commission, from getting kickback, for telling people getting a 50-year mortgage is the best thing to do. Are you insane? Is this chick insane? Is she really going to justify a 50-year mortgage as being an excellent, genius option? You got to be kidding me. Now, I understand, man. People need to make money nowadays, right? You need to make money. We'll all have a side hustle, but come on. Honesty, man. We need to be honest with people and not tell people a 50-year mortgage is the best option. How are you willing to put someone into debt for 50 years of their life? 50 years of their life. Now, don't get me wrong. You can sell the house and get out of it. I get it. But as long as you're living in a house, and let's say for like 15, 20 years, all you're paying is interest. And do you think you are going to build some equity on that? Hell no. The amount of equity you're going to build is going to be extremely slow. So what's the point of putting someone into a 50-year mortgage? Makes no sense whatsoever. But let's continue listening because this chick has a lot of crazy stuff to say.
Everyone keeps talking about the amount of interest that you're about to pay over 50 years. And I will say it is pretty crazy. I saw an example for a $400,000 house that it was like 1.7 million in interest or something crazy if you kept that loan for 50 years. But what most people are missing is that the average homeowner in America only lives in their home for 11 years. And that is to say they live there, but they're likely going to refinance the terms of that mortgage. Like the likelihood of you having a mortgage that you get today for 30 years is very low, even if you live in that home for 30 years.
Oh, I'm sorry. She's right. I'm missing it. We're missing it, right, guys? We're missing the point. We're going to live there for 11 years anyway, so who cares, right? Who cares? So what's the point, right? What's the point of just worrying about a 50-year mortgage if we're just staying there for 11 years? So then what's the point of getting a 50-year mortgage, man? Might as well get a 30-year mortgage where you can keep the home, pay less, right, in interest, and you can build some equity. Why are you so willing to, why is she so willing to convince us that equity is not a big deal, interest is not a big deal? It's not a big deal. We just have a place to live. It's just a freaking house. Okay, it's just a house. That's it, man. A house is a lifestyle. I personally cannot buy a Ferrari or a Maserati. I can't afford that. But if someone's gonna offer me a 50-year car note, then yeah, I would be able to afford it. But that doesn't mean I could afford the car. I could just afford the payments. And trying to make the payments, bring it closer, make it easier for you. Guys, I'm gonna tell you something right now as well, because I looked into this. If it extends from 30 years, which is the traditional people do, people usually do 30 years, fixed rate, 30 years to 50 years, is only going to be a difference between $150 a month and $200 a month. That's it. That's how much less you're going to pay compared to those two terms. It's not that really big of a deal. The big problem is you're paying nothing but interest. And what's the point of just going to work, grinding, and just giving the bank that payment every single time, making the bank rich while you're here just, well, living in a house, doing all the repairs? At that point, you might as well get an apartment. 30-year mortgage, guys, shouldn't be something that's so difficult to achieve. It really isn't. It's 30 years. The price of homes is extremely expensive, and the rates are now is extremely high. I get that. But be patient. Put extra money down. You don't have to try to bring it closer and make it easier for yourself because it's not easy. Okay, just making those payments is half the problem when it comes to home ownership. We all know that. The taxes, the homeowner's insurance, the repairs, that's the bigger problem. And you want to have money left over to save and invest. But come on, 50 years just seems really, really excessive.
And that's because you're going to do a cash out refinance. The rates are going to come down. So you're going to refinance. And every time you refinance, like right now, I'm taking people from a 30-year term to like a 20 or 15-year term. So the idea behind a 50-year mortgage isn't because we want you to be in this house for 50 years. I think that's actually insane that people are even in the same loan terms for even 30 years. The idea is that it gives you breathing room to qualify for a house. And that's the problem that we're facing right now. People cannot qualify. Yes, the savings is like maybe $200 difference from a 50-year to a 30-year, but that $200 difference actually makes a difference when it comes to qualifying for a mortgage.
If you cannot qualify, you cannot qualify. Straight up. Just understand that. If you cannot afford a house, you can't afford a house. Making it easier for you to make the payments doesn't fix that issue. It doesn't fix the supply and demand, none of that. Because right now there is a huge demand out there for people trying to get a home, but the supply is just not there. And thinking the payments have become lower makes it easier for people, it's not. All you're going to do is introduce more of a demand, but the supply is going to remain there. So actually, you will end up pushing the cost of the home. So that little $200 you're saving is going to be wiped away because now the prices of the homes are going to be a lot higher because it's going to be a huge demand. So all this that she's saying, what's the point? People missing it. No, man. No. No, no, no. And how are you going to refinance or take cash out or do a HELOC with what? With what? When all you're paying is nothing but interest. With what? Unless you get really lucky, you get a house and the housing market just blows up and you're getting a good amount of money, but that loan is remaining the same. Like you don't at least you have the loan value going down and then depreciation going up, creating you a bigger wealth. It's staying there while your appreciation is going up. And right now, it's not going up as much as it used to. Right now is not the best time to buy a house, period. The housing market is a mess. The mortgage rates are being so high. There's so much you're dealing with right now in the market. So simply just saying, man, 50-year mortgage. I'm trying not to curse. I'm trying not to curse.
I just ran this example with one of my clients. They're trying to buy a $700,000 house. And if their interest rate was, let's just say, worst case, 7%, they're going to be paying like $4,800 for that $700,000 house at a 30-year term. If they got a 50-year mortgage, then they're paying $4,000. But here's the kicker. Their initial budget was like $5,000. So they can still do a $5,000 payment and pay less than 30 years of that entire mortgage. And this is only because this is their dream home. So they're going to be living there for probably actually 30 years. But if you're not going to be living in that house for 20, 25, 30, 40, 50 years, then the amount of interest that you pay in the overall amount is kind of null and void.
No, it's not null and void because at least you know you're going to get a big equity back in the end and you're good. Oh man, this girl is crazy, man. I can't with this chick. I can't. Now let me explain something that she's saying that I have to address. Number one, this is all hypothetical. This is all just talk, chump, spew that out there. The possibility of this happening, guys, is null. And the reason why I'm saying that, even though Trump finds ways, man, he does. But the reason why is right now, the Dodd-Frank Act, it's maxed out to the length of the mortgage. Right now, it's 30 years. So 50 years is not even an option that could be provided to people out there. Now that Dodd-Frank is going right now for the government type mortgages. Private would, they definitely will offer a 50. But if you think that mortgage rate is going to be 7 or 6%, you are losing your mind because they understand that the risk of someone having a 50-year mortgage is a lot higher. Listen, who plans on working in your 60s, your 70s, and your 80s? And right now, the average first time home buyers, is 40. 40. So if you get a 50-year mortgage, that means you'll have that mortgage if you keep it to the age of 90. No one's working in the 70s or the 80s, and you're not going to have that much money. You're not going to have a job to even be paying and maintaining that mortgage. So your risk is going to be a lot higher. The fees that they're going to charge is going to be a lot higher. So you will be paying so much in interest simply because you're trying to keep a low payment and you're putting yourself in retirement risk, right? You're putting yourself in retirement risk where you're working to just maintain that mortgage. It's not a good idea at all. She's not going to say that though. Of course not, but it's not a good idea.
Especially when you're working with an advisor like me, I tell my clients, if you make $100 more to the monthly payment, you shave off like 4 to 7 years of that entire loan term. And of course, you're saving a ton of money in interest by doing that because now you're not paying the interest on the full term. So honestly, this is just like another tool in the toolbox for a strategy that you can use so that more people can just get into a house and then they can figure out that monthly payment later. If you're looking to work with a loan advisor, I am accepting new clients
Nah,
for the
nah, nah.
coming
I'm not
year. So
promoting
head over
that
to link in my
channel.
bio to
Listen, I respect the hustle. I respect the hustle and I respect the rage bait. To me, that's rage bait. I don't think she's that dumb. Maybe she is. I don't know. But I just cannot respect that. And I just can't understand how someone can call himself a loan advisor and wants to get a lot of good clients and you spew stuff like that. Most likely you're gonna get people who are desperate and wants to get into a home and they're going to listen to that advice and they're gonna say, you know what? If she could get me into a 50-year mortgage, that's the girl I want. But no, no. Listen, guys, personal finance, I understand it's personal, but you cannot just live a life of debt. Okay, you cannot continuously live a life of debt and stretching out payments to a point where it feels like, hey, I could afford it. You cannot afford it. You cannot afford it. You have to have a budget and stick to that budget and know the cost of the home, not strictly because of the payments. No, can you afford the home? The same way as when you do it with a car and everything else in your life. Can you afford the total cost? And I guarantee you plug that into a calculator and you see you're paying 4 to 5 times more the amount of the home. You gotta look at it like that's insane. I mean, you really look at a 30-year and you recognize, okay, this is high as well. But majority of people in society do it. A huge portion of society do it because that is a 15 or 30. I know they have 20s as well. It's it's better to get a 30. 30 is better, especially when the first time home buyers was a lot earlier. 30 is okay. It's high, but it's doable. Because she's right. The average person doesn't stay in the house all that long. But the key is, at least after a few years, some of that money will now start going into the interest rather than some of that money will start going to the principal rather than only the interest. Well, guys, drop a comment down below and you let me know what you think or what you think about the 50-year mortgage fiasco. To me, it doesn't fix the housing crisis. It's still an issue. That's a horrible solution. But I don't know. I like to hear what you guys have to think about that situation. Drop a comment down below. At the same time, hit the like, leave a comment, and subscribe. Genius? I don't know about that. Peace.